What's up, guys? It's day 14 of our BGW bootcamp, and in today's video, I'm going to be talking about fair value gaps, which is known as FVG, or you can call it imbalance, right? And if you don't know what an FVG is in a chart, an FVG or a fair value gap is a price imbalance on the chart where the market moved so fast that buyers and sellers didn't trade fairly in that particular area. And because price skips those levels and markets not trade very well, so always market often come back to fill that fair value gaps. And in this video, I'm going to show you how to spot a fair value gap, show you what is a valid fair value gap, and then so that you can go ahead and then say these things yourself and know how to look for fair value gap yourself when you see one right there, right? And if you're still watching this video, you're following this bootcamp, you want to know that this bootcamp has been sponsored by Bluefin and Weex, and all you want to do to start trading with these exchanges, so it's the first link in the description section. Set up an account on any of them, and then once you set up an account, what will happen? You will get huge incentive from them right there. And without further ado, let's dive in and guide you through how to spot fair value gap and know what a fair value gap is in a chart. All right, so looking right here, this is a let me check this in a 1 minute time frame. Now if you watch right here, you can see that fair value gap starts from where candle opens and candle close. You cannot just say, okay, because I say where market price, that from all here, maybe from all here to this zone are all fair value gap. No, all of them are not fair value gap, but there's a particular place there's a fair value gap. All right, guys, let's spot out the FVG from that of the 1 day time frame, 4 hours, to that of the 1 minute time frame, so that you can tend to understand and easily spot this thing yourself. Right now, this is a 1 day time frame on gold, right? As you can see. So now, where is the FVG looking right here? So if you watch, basically gold has been giving us a higher low, higher high, higher low, higher high, right? Now if you watch carefully right here, there is an LVG, which is a fair value gap. You can call the void, right? Now this void right now, you can go ahead and spot it. Now if you spot it, you tend to know where you can trade off from. And like I said, price take out this LVG when it's coming back. Right now, let's spot it out. Now you want to know that this LVG tends to be the opening or close of a candle, right, to the point whereby there is no void. Now where is the place? Now let me get to this. Now if you watch right here, from this zone to this zone, now this is a 1 day, so you won't tend to see it compared to like if you're like using that of 4 hours, 15 minutes, and so on. You get? So let's put to this point, right? So now this particular zone right here was just a bullish candle, a very long candle, and this particular candle is an LVG in a 1 day time frame. That this is to say, you can say right here, let me come to this zone. You can say like from this zone right here is an FVG, right? So this is an FVG. So what are we expecting? Is either we expect price to either come to this, to the 50% of the FVG, or take it out or completely before continuing, right? So that is how FVG works, right? Now it's either price come to the 50% of the FVG, or it completely takes it out, then before continuing its bullish trend, right? And don't worry, guys, we're not going to be entering this strategy on, we're going to be using in trading our technical analysis. You will carefully understand this. Now let me now go back to 4 hours, because this is LVG in 1 day and you won't tend to see it, so you all very clearly. So you could just say, okay, let's see if we're going to see something else. I'm going to see that price has been just been bullish in gold. Don't worry, I think I'm going to use other pearl, so you can carefully understand this very, very well. Know where FVG are and where you can carefully spot them. So let me go to 4 hours. Now 4 hours right here. So as you can see, so you want to see that now it changes, right? Now let me delete this. Now you want to see that the exact AVG it's here. You see it actually aligns with that of the what's it called, with that of the 4 hours, but a bit different. Now what's the difference? Now let me delete this stuff I drew here. Let me delete this rectangle. So you tend to understand what I'm trying to do right here. This is very simple if you pay close attention. Now let me delete this one too. Now from this zone, from here now, from this zone to this zone now becomes our new FVG, right? So which is to say this zone right now, from here to this zone, is now our FVG, right? From where the candlestick close, right, to where the candlestick to the point where this other candlestick open becomes your what? Your FVG. Now you are seeing this void. This is a void. This is an imbalance. There is no other candlestick that tend to take it out or tend to like correctly move in a perfect order. So that way we are expecting price to as well take 50% of this candlestick before it continues, or take it all down below. Is that easy? So that's how this fair value gap is. Now let's check for another one. Let's see if we're gonna see something really cool again. Let me check. Okay, let's see. All right, let's see this. Now if you watch right here, we can see this is an FVG, and to this zone, let me show you guys. So this is how you spot good FVG. So right here becomes your FVG. So this is like back test of it. So right here in this zone become your FVG. So this point right here is your FVG. And what the price, immediately price came down, price do what? Take 50% of it. Take 50% or all of it. Now what is all of it? From this zone to this zone. Now not all of these places an LVG, just this this void, right? Because there's a candlestick that is still coming, and also another candlestick that is still taking it. So now these candlesticks are very important. Now whenever you're not seeing any candlestick previous and after taking it, then that AVG is very valid. You get? Now let's still go through like 1 hour, so you still tend to understand this then in a well placement, right? Let's check 1 hour right there. All right, let's check 1 hour. All right, so I'm not seeing anything in 1 hour. However, we are still having something right here. Right now, where's an AVG? Now from this zone previously, from here to here, let me show you guys. From here to where you're seeing this candlestick close in an AVG. So therefore, this void, this imbalance from this zone is now an AVG. And what the price do? Price clearly take it out and keep on going. It's just that easy. So you can literally spot out AVG in the sell position. You can still spot out AVG in a buy position. So AVG happens on the both sides, right? Cool. Now let's go to that of the 30 minutes time frame, because in every time frame you can clearly spot out AVG, right? And let's come right here. So looking from this right now, so we can see another AVG, another fair value gap. Now from this zone right here to this zone, let me mark it out. You can see to this zone. Now right here is an AVG, so it's also aligned with the previous green candle. So you saw the green candle, the full bullish LVG, and what happened? Price also came and then take it out and form another bearish LVG. And what's price trying to do? Price trying to also take it out and continue the trend. And what has it done? Immediately take 50% of the LVG, is now selling again to correct this other one. It's just that easy. It's just that easy. Now let me get this so you clearly see where the LVG is, where I'm talking about. Now from this zone is an LVG, right? This zone is an LVG. And what's price doing? Price has taken out almost 80% or 50% of the AVG, and immediately it is taking it out. And what are you saying is now what selling down to either correct this right here from this other block and then continue the buy, or this, or also continue the bearish trend. This makes sense. This is easy. AVG is as well easy as ABCD. It's just you spotting out where this imbalances is, where this high bullish candlestick is, or high bearish candle moves is, and then you spot it out, and that is your AVG. So if you're able to spot distance, you're very good in spotting out AVG. So let's check out 15 minutes. And guys, if you're actually enjoying this video, all I want you to do is to like this video, subscribe to the channel, turn on the bell notification so you're going to be notified whenever I will upload amazing videos like this on this particular channel. So without further ado, let's go ahead and check on that one. So this is the same one which I just drew, and as you can see, it's also aligned with that of the 15 minutes, which is to say this AVG is cool, and you can see price is taking it out, and immediately price tend to take it out close to the 50%. And you can see where the candlestick wick ends. Let me show you guys, so you tend to know that. You can see where the candlestick wick ends. That is where it tends to tap into it, and then it starts selling back, which is to say right here is only the AVG from these zones you're seeing right here. All these zones are your AVG in this time frame. All these zones are your AVG in this time frame. That makes sense. Is that easy, guys? Is that easy? Now let's check that of 5 minutes. So if we can see an LVG, right? There is no LVG right here. Okay, I've seen one. Let me drag it to that zone. So this is an LVG with a very slight LVG. So now if you watch, basically price has taken it already previously, and immediately price came, it took out over 50% of it, and then before going. Now that's how the AVG works, right? So AVGs are like imbalance that price always comes to correct, right? So AVG are not left unkept. Price either corrects 50% of it or all of it. You just want to know that, right? So let's check 2 minutes. It's always rare to see AVG in 2 minutes, but I feel that you're gonna see something. All right, I've seen something. Now you can see this is an AVG. Let me skip this. So I just want to show you guys this AVG so you tend to know it and you can identify it whenever you see it. So from this zone right here, from this zone, so this zone, from that zone, sorry, to this zone is an AVG. So right here, from here to here is an LVG. Now what did I say? Price always come to take out every AVG. It's either it take out 50% of the AVG or it take it all of it. And what happened? Now immediately, sorry guys, let me do this again. Now immediately price went all time. Now what happened? This is 50%. Now to clearly show you that is a 50%, I'm going to get this Fibonacci tool, then place it from here to here. Boom. Now where's the 50%? Exactly at the pivot, right? And get this Fib tool, place it so you tend to understand this very, very well. Now where's the 50%? Exactly at this pivot. That is where price took it out. Price take 50% of the FVG, of the fair value gap, and then do what? Continue the trend. It didn't take it all, and as you can see, it still didn't take out all of the FVG, but it took out 50% of the FVG and did what? Continue the trend. So that is how fair value gap works. That is how, if you're trading, you want to spot out these FVGs, you know that price will take it out, but in the two scenarios, it's either it's taking out half of it, which is 50% of the fair value gap, or it's taking out all of the fair value gap. And then when price is taking out all of the fair value gap, there is something is going to retest, and that is called the order block, right? Now this order block tends to be either the bearish candle before a bullish move, before that bullish fair value gap, or a bullish candle before a bearish fair value gap. Now I'm going to be teaching you guys other block in our day 15. I'm going to explain in details. I just give you an overview on how Destin work and what a fair value gap is. And I went from going from that daily time frame to over the 3 minutes time frame to show you Destin. And if you don't still understand what this FVG are, what a fair value gap is, you can go ahead and still ask me a question and ask question in your comment section, and I'm going to be right there to answer you. So the assignment of the day is you can go to your trading view, choose whatever pair and mark out fair value gap from 4 hours time frame, 1 hour time frame, 15 minutes time frame, and 5 minutes time frame. These are like measured key time frames you need to be trading the forex market or the crypto market, whatever analysis you want to do, be it option trading, be it and whatever trading, guys. But right now you want to understand how the FVG works, and if you understand this right now, comment down below. Thank you, Bernard. I understand. I'm gonna see you guys in day 15.